We can speak now to William Lee. He's chief economist for the Milken Institute and was deputy division chief at the IMF. He joins us from Henderson in Nevada. Many thanks for your time. So what are the stock markets reacting to, in your opinion? And is this a short-term blip or something more significant?
Well, there's a lot of discussion about uncertainty, and as your question premises, it's really focused a lot of the uncertainty on tariffs. I think it would be wiser if we focus on what it is that Trump policies are doing, and I think the uncertainty is a broader uncertainty because Trump came into office promising to reduce the size of government and therefore lower taxes. He promised to deregulate the economy, and he promised to use tariffs as one instrument to try to protect strategic American industries and to give incentives for global investors to come invest in the United States. So the tariffs are just one instrument in a broader package of policies. And right now, I think the uncertainty is, how is Trump going to do all this stuff? Elon Musk is already causing a lot of disturbances about reducing the size of government. He's getting a lot of pushback from it, even sometimes from the cabinet. And I think the stock market investors right now are saying, we've got a lot for the Trump administration to do. We don't see how they're going to accomplish all this stuff. And that's where I think the source of uncertainty is. Not so much the tariffs, but rather, can he shrink the size of government, can he deregulate, and can he get foreign investors to come to the United States?
I mean, isn't it true that even before Trump's latest policies, there was a worry about the stock market being overpriced? I mean, could we just be seeing a market correction, if you like, which isn't necessarily a bad thing?
And in fact, if you look at how much the market declined, it's been quite a bit in a short amount of time. But we're about less than 10% off the peak of last February, and even the very, very highly valued and very volatile AI semiconductors are back to where they were 6 months ago. So when you have that kind of perspective, stock market investors are sitting on a lot of gains over the last 2 years. So this last period of turmoil, in some ways, is, as you say, a correction of the perhaps overvalued market going in.
And what do you make of the huge falls seen by the likes of Tesla and Nvidia? I mean, why are those stocks taking such huge hits in particular?
Well, I think a lot of the shareholders of Tesla are saying, hey, the CEO of our company is devoting so much time to reducing the size of government. Is he really spending enough time to watch out for what's going on with Tesla and the fact that his market share may be slipping, and concerned about whether the sales in China and Europe and around the world are really going to live up to expectations? So I think that the disappointment is really over the fear that Elon Musk cannot multitask as much as he has already done. And as far as the other stocks are concerned, like Nvidia and some of the other semiconductors, they went up on the expectation that artificial intelligence will have a large impact on the American economy, on the global economy, on all of our lives. And I think right now people are starting to think twice and say, gee, how long is that going to take? And with the new innovations that have come out of China, a lot of investors are saying, do we really need to invest as much in the AI hardware as we thought we did before China announced their shortcuts?
And in terms of the bigger picture, when you look at the US economy, it has been incredibly resilient. Even through COVID, it seems to have weathered that better than others. The last real recession was back in 2008. How do you see it weathering whatever this is right now, this latest episode of uncertainty?
I think you're absolutely right. In fact, that is really the key question, because so much of the talk today in the financial press and financial broadcasting networks is about recession. And as you say, the last recession was artificially brought about by administrative shutdowns of the economy. Even before that, the economy was doing quite well. And right now, the economy is doing quite well. In the United States, the most stretched part of the economy are the consumers, because right now there's a huge bifurcation between those who have a lot of assets like stock market wealth and pension wealth. Those people are doing well and able to spend out of their capital gains. But a lot of people, 60% of the population in the United States, is living hand to mouth and working multiple jobs just to make ends meet. So you have this social stress going on in the United States. And I think that's really the key vulnerability in the United States. But so far, the numbers are showing that the families seem to have, in aggregate, enough income to really continue the kind of spending that they've been doing. So the likelihood of a recession is very low. And I think President Trump was being overly cautious when he said he can't exclude a recession. Well, no one can exclude a recession, but the likelihood of a recession over the next 6 months to a year is really still quite low.
OK, really good to get your thoughts. William Lee, chief economist for the Milken Institute, joining us there from Nevada.
Thanks, man.